was a wild week last week, and I'm not just talking about my family's vacation in Hawaii. Last week, the bond market was down 182 basis points and is not starting off very well this Monday. Good morning, I'm Jed Wonderly, and this is the Las Vegas Mortgage Market Minute. Hey, really quickly, we got a lot of stuff to cover. Like I said, last week the market was down, the benchmark bond anyway was down 182 basis points, which equates to about 3/8 to 0.5% in rate. What we're seeing right now from a technical standpoint is today the bond price is below its support level of 99. Also, it is oversold. So from the relative strength index is showing that it is oversold, and that there's obviously, because of that, a possibility of investors stepping in, wanting to make a quick profit, buying at this low spot, and then for their sake, hopefully, riding it up a little bit and getting a nice quick profit. What happened last week was we had some good economic data. Mostly, the biggest influencing factor was the jobless claims. Every Thursday we have initial and continuing jobless claims. Those were not good. They were actually good from an economic standpoint, but from a bond standpoint, those were not good. There was some other news that came out last week, the PPI, the CPI, and a whole bunch of other stuff. Most of it surprised to the good side. There were some moderating data that allowed us to not be any worse than we were. But this week we've got nothing on the docket today or tomorrow. We've got, of course, initial jobless claims and continuing claims again on Thursday. We've got Fed minutes on Wednesday. We also have the Jackson Hole Symposium for the Fed presidents and whatnot on Thursday and Friday, so we might get a little bit of news out of there as well. I know that the investors are looking very closely as to more clues and hints as to when the tapering is going to start. A lot of people think it's going to start in September, and I wouldn't be surprised if it did, but certainly it's most likely to start at least by the end of the year. Not a whole lot of other economic news on tap for this week. But as I speak, we are down 37 basis points, so lock those loans. The recommendation is to lock, whether it's 7 days out, 15 days out, or 30 days out. I would definitely lock and at least sure up those prices. Don't forget, we have our 1-year lock availability, so that if you've got somebody who's going to be, who's in a short sale, and you don't know when that approval is going to happen, and you're afraid that rates are going to continue to trend up, as many people believe they will, I would definitely look at using our 1-year lock policy. We've also got that for people who aren't even in contract. So if your buyer doesn't have a property and they're shopping around and you don't know how long it's going to take to get into contract, let's get them locked now. We can get them approved, get them locked, and they don't have to worry about what's going to happen with the interest rates over the time while they shop. We, of course, can float down as well, so they get the best of both worlds. That's my report. I'm sticking to it. This is Jed Wonderly with the Las Vegas Mortgage Market Minute. Have a great week. Take care now. Bye-bye.